makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Stocks are heading for their best week of the year after a raft of central bank meetings indicate that a pivot towards a looser policy is on track. Double trouble for Apple. The iPhone maker loses more than $100 billion in value after it's sued by the U.S. Justice Department over antitrust violations. Across the Atlantic, European regulators prepare their own probe into the company. Plus, Nike shares fall further pre-market as the world's largest sportswear retailer also looks to realign its product offering. Well, it's Friday. We've made it. It's been a very busy marathon-like week for central banks. So let's get straight to the European markets map. Now, a lot of the focus, of course, will be on what we heard overnight from the U.S. Now, stocks had a great week. Let's not mince our words. They've had a great week so far after this raft of central bank meetings really indicated that a pivot towards looser policy is on track. Now, investor appetite has been rekindled, frankly, since Wednesday. This is after the meeting from the Fed, fueling hope that U.S. policymakers will deliver 3 interest rate cuts this week. A couple of things we need to watch out for. I know Alphabet was down yesterday. Apple was also down. For the moment, a lot of European stocks are a little bit in a wait-and-see situation, but I'm also looking at dollar climbing 0.4%. This is a picture for U.S. futures. So across the board, if you look at U.S. futures, after the pretty incredible week that they've had, maybe they pause for a little bit of reflection. This was also S&B week. It was also DOJ week. So let's get straight to after those futures in the U.S. A little bit on the upside, but really not changed by that much. Yen also a little changed, trading around 152 per dollar as Japan's inflation accelerated to the quickest pace in 4 months. And then I'm also looking at renminbi. Probably the most interesting story, certainly today, gaining some 0.6%. We're getting some breaking news. The data, always important. This is what probably will drive markets forward in the next couple of weeks and months. So that Germany, March, Ifo Business Confidence Index coming in at 87.8. The estimate was 86, so a little bit better than expected. At 9:30 a.m. UK time, we'll speak to the president of the Ifo Institute, Clemens Fuest. France and Germany over the last couple of days, kind of disappointing when it comes to data. So always interesting to get his perspective on what Germany needs to do now to kickstart its economy. To talk about the markets, Germany, but also the U.S. We're joined by Karim Chedid, Chief Investment Strategist for iShares EMEA at BlackRock. Karim, as always, thank you so much for joining us. What a week. We've made it to Friday.
Made it.
We've made just about, I mean, we still have a whole trading day
Absolutely.
ahead, but it's incredible. You have the S&B. It actually surprised a lot of people, but it seems that even the DOJ, everything was well telegraphed.
Mm-hmm.
So it was really the Fed giving hope with this risk-on attitude.
Yeah, absolutely. And, you know, taking the cue from the BOJ for a second, I think we've seen the exit from the negative interest rate policy, but it's really interesting that even though they telegraphed it really well and they have technically exited the yield curve control policy as well, the backstop has not been taken away. And markets have run with that. So, you know, we're seeing that positive risk for markets. And when I tie it back to our asset allocation views, Japanese equities are one of our key overweights.
But is there a concern, Karim, in your mind that actually, so, you know, the BOJ has hiked at last, but actually it's not a liftoff. This is not going to be a sea change. It's not necessarily the start of a new cycle with this rate hike. Exactly.
And this is why I would put the BOJ in a different bucket, because this is the end of negative interest rate policy. This is not the start of a tightening cycle. They are still very firmly accommodative and in supportive policy. And then when we look at the Fed and even the BOE to a certain extent, if we zoom out, the big picture is this is a good environment for risk assets because we are inching closer to rate cuts, even if they're not happening this week or tomorrow. But this is not the end of inflation volatility. We did have a couple of volatile numbers in January and February. And so when I think about the TAA, risk on, when I think about the SAA, I think getting more dynamic because of this volatility in macro.
Okay, Karim, let's also bring in Justina Lee, of course, from Bloomberg. Justina, thank you so much for joining us. China kind of also left, right, and center, but didn't really move markets, except for today. There's quite a big move in yuan.
Yeah, one thing that was really interesting is that obviously we're seeing dollar strength everywhere, but the yuan move specifically was partly triggered by how the central bank fixed kind of the currency at the open, meaning that it kind of signaled to markets that it was willing to tolerate a bit more weakness. Now, part of that is probably because they're seeing dollar strength all around the world. And so they understand that it's not like you can kind of like fix the currency from its true value for a really long time. And that's why we are kind of seeing the weaker yuan today, but also a big move down for Chinese equities on the back of some concerning earnings.
But because basically traders, say, look, there's a weak corporate guidance, and I guess Beijing at the same time is relaxing its grip on the currency. So what am I left with? Are those some of the questions that traders are asking themselves?
Yeah, and I think Chinese kind of policymakers are really in a bind here, right? Because they've been signaling kind of for the past couple of weeks that there's going to be another reserve requirement ratio cut. But then the problem is if you're easing monetary policy to kind of prop up growth, then naturally your currency will decline. And all along, I mean, China has always been quite uncomfortable with too much currency weakness and too much outflows. And I think they're kind of back in that position where they're having to grapple with those forces at the same time.
Karim, what's your take on China? I mean, I know there was a lot going on this week, so maybe China wasn't left, right, and center, but it's always those interesting weeks where you understand maybe that, Beijing is trying to do something else than what we think they were.
So when I put it into the context of our portfolio views, emerging markets, one thing we're seeing is that with developed markets in risk on and risk appetite quite positive to add to equity positions in places like the US and even Japan, we're seeing a little bit more of a lukewarm sentiment from investors, and we see that in some of the client conversations that we're having around EM, but there is selectivity in EM. So when I look at the flow picture, Jan and Feb, very strong flow months for emerging market equity ETFs, but mostly in single country exposures. So thinking about more precision exposures as opposed to just the broad bucket.
I mean, the other two, I think, stories of the week is probably what's happening with gold, definitely, for the first time ever touching 2,200, and then Bitcoin trade around 66,000. So actually we had that record high, 10 days ago, and it's now not doing as well. What are some of the forces? Is it all to do with central banks, or is it also positioning ahead of something?
I think that behind those two rallies is probably kind of the expectation for rate cuts. But it is, of course, kind of interesting because we think of like gold as maybe like a safer asset, and then Bitcoin is kind of all about speculative fervor. And I think kind of Bitcoin has had really kind of extreme run up. And so we're just kind of seeing a bit of a pullback in sentiment. And we're also starting to see some outflows from those Bitcoin ETFs. And I think that's kind of contributing to the move. But it's always kind of hard to tell with crypto, isn't it?
Yeah, but it is, which is kind of like confuses, but also it feels like it's these like opposing forces. But at the same time, it's part of the same movement.
Yes, I'm going to be more contrarian here.
I like that.
Yeah. Look at the gold-silver ratio, because gold, it's been all about gold, and we like gold. We've been quite positive on it. We've seen, we haven't seen the flows, even though we're positive on it, the price action. So it's a bit underpositioned. Obviously, central bank purchases have been a big driver of that metal, precious metal. But if you look at silver, that gold-silver ratio has been hit record levels at one point in recent weeks. So silver has been lagging. So one thing we're seeing is some catch-up relative value trades on silver relative to gold, because some of the fundamentals that drive gold also drive silver, but it hasn't caught up.
And this is what, the world economy, or is it just an inflation play?
It's not.
I'm unclear what gold is doing right now, if I'm honest.
Exactly. So gold it tends to be more of a safe haven. Yeah. It has become more stable because of the more sticky purchases from central banks. Silver is a mix. It's a precious metal, but as you say, world economy, it has a bit of an industrial usage as well. So you could think of it as a trade where you're putting a bit of an upside tail risk on the world economy upside hedge with silver, but mostly also a technical trade, if you believe in technicals, because that ratio looks too steep.
Does anyone not believe in technicals?
Yeah.
No, I'm kidding. Justina, I mean, when you look at industry, it was a big week for luxury, because we had Kering, the company that owns Gucci, really disappoint. And then you had this, Micron kind of flying off the shelves, giving us a lot of hope on semiconductors in general. But then Alphabet and, of course, Apple being smashed because of regulation.
Yeah, it's really interesting because we used to think of Magnificent Seven as a group, but more recently we have seen kind of some diversions within Magnificent Seven. I mean, obviously it's been kind of interesting to observe that NVIDIA is kind of still kind of fueling so much kind of enthusiasm and still going up further, kind of on the back of the recent announcements about some new chips. And I think it's been kind of interesting. Like, if you look at the stock market and look at like the momentum strategy, where you're just kind of buying the past winners from the past 12 months, I mean, that's been going up like a straight line. And I think it's a sign that of like kind of how kind of positive sentiment is. And everyone's just riding the same train here, which always raises the question. I mean, is it like kind of a too crowded trade at this point?
Okay, I love so many questions getting you started for the weekend. Karim Chedid, Chief Investment Strategist for iShares, EMEA, and BlackRock, and Bloomberg's Justina Lee. Now, let's look pre-market. Sportswear brands Nike and Lululemon dropping after they both lowered their sales outlook. Nike says it expects revenue to fall as it shuffles out older merchandise. Lululemon says the U.S. market has slowed down, both under pressure. Coming up, we'll be talking to Paschal Donohoe, the Eurogroup President, and Ireland's Minister for Public Expenditure and Reform. That exclusive conversation is up next, and this is Bloomberg. EU leaders continue to meet in Brussels today, with the bloc set to impose tariffs on imports of Russian grain as early as today. Negotiations continuing over $1 billion worth of support for Ukraine using profits from frozen Russian assets. Now let's go live to the summit in Brussels, where Bloomberg's Oliver Quirk is joined by a great guest. Ollie, over to you.
Great. Thank you so much, Francine. Yes, we're joined right now by the president of the Eurogroup, Paschal Donohoe, who joins us now here in Brussels. He's about to speak with EU leaders alongside Madame Lagarde. So I'd like to begin there in the sort of European economy. All of the CEOs that I speak to, particularly in Germany, particularly in the auto industry, there's a lot of concern around 2024. What are we expecting in terms of growth in Europe and critically in terms of inflation?
Well, we are going to be expecting growth in 2024, and we can expect inflation to continue to fall. The growth isn't as high as we would want. But even though we do have growth, we, alongside that, are going to have record levels of employment. So we do have to acknowledge the uncertainty and the risks that are confronting Europe at the moment, mainly because we are so close to the war, but we are still in a phase of growth, albeit low growth.
And do you think that inflation will get to that 2% in the sort of next year or two, or do you think that it actually could have a longer tail?
I believe it will get to 2%. I believe the right decisions are being taken at a monetary and a budget policy level to contribute to us getting to that point.
And I want to talk a little bit about what we're here to talk about, what the EU leaders are talking about, because as the president of the Eurogroup, few people know the minds of European finance ministers as well as you do. What do you think we will get in terms of seizing not the Russian assets, but the profits? Will we get an agreement today? Do you think that there is the will there?
I think it will take some time to get to that agreement. The main point being that the Commission published their proposal on that this week. Mm-hmm. It now has to go to member state governments here within Brussels, within the European Union, and be considered in various technical and ministerial meetings that will take place. And that will just take time to do. But there's momentum behind us, and I believe progress will be made. But what will now happen is this proposal will go to member states of the European Union, and efforts will be made to continue to coordinate on this issue at an international level within the G7.
And I'd like to get your sort of early reaction as well, because we had a proposal out of the United States on these so-called freedom bonds, which is sort of looking at how to deal with the future profits and potentially package them to front-load much larger quantities of aid to Ukraine. Do you think that that would have buy-in with
Well, this is the kind of issue that will have to be considered now in the context of the proposal from the European Union Commission. I do believe there is a recognition regarding the importance of this issue. But as I said, the proposal has only just been published. It is a proposal that needs to be, and I believe is legally sound, and now governments need a little bit of time to respond back to it. But the key point is that progress has been made, and we need to continue to look at how this matter will be coordinated across the international economic community.
And funding defense is also front and center for your finance ministers and for your leaders. This idea of joint debt, is this a pipe dream, or do you think there's a path to this?
Well, the discussion on that has really begun here today. We've heard a number of member states make the case for us. I think it's fair to say at the moment there isn't a consensus on the matter. However, defence expenditure has now been increased very considerably over the last 18 months. And a few weeks ago, here in this building, Prime Ministers reached agreement on a €50 billion funding package for Ukraine over the next number of years, some of which indeed does relate to defence. So what there is consensus on is the need to build up defence expenditure. That is happening, and the debate is beginning now in relation to a new financial instrument for that, but there isn't currently agreement.
And a quick word on the EIB. Do you think that there will be a rule change, one? And two, does there need to be more money allocated to defence? I believe there's only about $8 billion currently in terms of lending that is earmarked for defence.
Well, I understand the EIB are looking at this issue under their new president, President Calvino, who's doing an excellent job now leading the EIB. They will be looking at what their role is in relation to this, and they have been asked by Prime Ministers and Finance Ministers to consider this issue and to report back to them shortly.
And you hold obviously a position also within the Irish government. We'd be remiss if we didn't ask you, do you support Simon Harris for party leader?
Of course I do. I've known Simon for many, many, many years. I believe he has all the qualities that will enable him to be a very, very successful leader for Fine Gael, and will also allow him to be an excellent Taoiseach. We've had a very dramatic week back home.
Indeed.
Where we'll be saying our current Taoiseach, Leo Varadkar, is here in our last European Council. I believe he's done a phenomenal job as Taoiseach and as leader of our party, and I wish him every success and every good wish in the time ahead, and very much look forward to working with and supporting Simon.
And there will be ultimately a cabinet reshuffle. Will you continue to serve in your position in the cabinet?
Well, that's very much a matter for whoever the new Taoiseach would be. I, of course, hope to continue with my work, but from being through many moments like this in the past, it's a matter for the new Taoiseach, and I'm not going to make his life any more difficult by making statements on it. Of course I want to continue with my work, but I recognise that it's his decision and his mandate.
Well, Paschal Donohoe, thank you so much for your time here, for talking Irish politics, but also, of course, the very complicated and very vast issues that confront European leaders here and finance ministers, which is namely funding, yes, European defence, but also getting those funds critically to Ukraine.
Ollie, as always, thank you so much. Great interview there with the Eurogroup President. Now we'll have plenty more on Ukraine. We'll have plenty more from Brussels. Also coming up, Apple accused of getting to the top by stifling innovation. We'll have the latest on the tech giant and its mounting problems with regulators. That's next, and this is Bloomberg. Well, Apple shares are narrowly higher in pre-market trading today. The iPhone maker lost more than $100 billion in value yesterday. Now, U.S. regulators are suing it for violating antitrust laws, accusing the iPhone maker of dominating the market by stifling innovation. Well, Apple says the lawsuit is wrong on the facts and on the law. With us now, as always, Bloomberg's Alex Webb, who focuses on tech daily for us. So first of all, Alex, what exactly is Apple accused of?
It's basically accused of sort of squeezing out competition on a number of different fronts. There are things like the Apple Watch, right, whether it doesn't let other smartwatches interact quite as easily with the iPhone as the Apple Watch itself does. Things like iMessage, where, of course, if you get a message from a platform other than Apple's, of course, most notably Google's Android, it appears as a green message rather than a blue message. There's not quite as much functionality with it. And a big one, which actually is coming to a focus in a lot of places in the world, is payments, right? Whether, of course, if you want to make a payment, there's Apple Pay, but you can't say use Android Pay on your iPhone or indeed any other competing service. So these are the sort of things that they're really honing in on.
So, Alex, was the DOJ much more aggressive than we thought they would be, and what's it going to lead to?
I think the scope of it and the number of things, there are essentially 5 different pillars to it, is probably more complete than a lot of people had anticipated. I think there was a suspicion they'd go for maybe a few of these things. It seems they've gone for a pretty broad palette. That might be a certain degree of hedging their bets in the hope that at least one of these things hits home. But yeah, it's sort of the broadest kind of full frontal assault, as it were, on the kind of Apple ecosystem that we've ever seen.
Yeah. And is it also facing, of course, there's facing scrutiny in Europe?
Yeah, the interesting thing in Europe, of course, is that in the US, they are arguing this on the basis of the current law. In Europe, they have changed the law, and now it is looking at whether Apple actually engages with these law changes correctly. There are some accusations that it hasn't. Of course, Apple denies this, but that they haven't, particularly when it comes to payments through other services.
Okay, Alex, thank you so much. As always, Alex Webb, this is a story I have a feeling that we'll talk about a lot. It'll run and run. Alex is like, oh, yeah. Coming up, German business confidence rises. We'll get the details of the latest survey. That's coming up with the president of the Ifo Institute next. Again, a lot of the focus this week has been, for example, on the BOJ. It hiked at last. We have a great Bloomberg opinion piece saying, look, this does not necessarily mean with this rate hike that there's a new cycle that starts. The other big story this week is, of course, the Fed. That means we've had a market that's been much more risk on than in the last 4 to 5 weeks. The U.S., you can see 2-year 4.60, and the 30 is at 4.41. We'll have plenty more on markets. We'll have plenty more on gold and Bitcoin, too. This is Bloomberg. Well, stocks heading for their best week of the year after a raft of central bank meetings indicate that a pivot towards looser policy is on track. Double trouble for Apple. The iPhone maker loses more than $100 billion in value after it's sued by the U.S. Justice Department over antitrust violations, while across the Atlantic, European regulators prepare their own probe into the company. Plus, Nike shares fall further pre-market as the world's largest sportswear retailer looks to realign its product offering. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, German business confidence has come in higher than expected, with the Ifo Business Confidence Index rising to 87.8. Now, I'm joined by Clemens Fuest, the president of the Ifo Institute. Mr. Fuest, as always, thank you so much for speaking to us on the back of these Ifo numbers. Finally, a little bit of encouraging news. How would you quantify this news? Surprising? Is it a turning point? Or wait and see?
It's probably too early to say it's a real turning point, but it's the second increase we've seen. We had one in February and now this. So I would say it's a stabilization. And after the worsening data in the autumn and over the winter, I think this is compatible with most forecasts that are saying it's going to be a stagnating economy in Germany in 24, but not a shrinking economy. So it's a stabilization, and that's, of course, welcome.
I mean, of course, the concern is that forecasters are really counting on consumers to try and drive this rebound in Germany. And so far, it's been very, very timid. So what's holding people back from spending more?
It's probably the uncertainty about the future. So many people are worried. We see that real incomes are increasing at the moment. So wages are rising more quickly than inflation or than expected inflation. And that's good in principle for consumer confidence. But at the same time, people seem to feel the uncertainty about the future. But in the data today, we see some bright spots. We see, for instance, hospitality strong. We see improvements in retail. They are coming from a low level. So it seems that consumer confidence is indeed rising. And that's one of the factors we expected as positive this year.
Mr. Fuest, I guess, some of the other things that I guess is puzzling a lot of people is the protracted weakness of Germany when it comes to manufacturing. So the manufacturing sector has been improving all over the world, certainly in many, many regions across the world and in Europe. Why have we not seen that boost in Germany so far?
So in Germany, many companies in manufacturing feel the uncertainty about the political environment, uncertainty about regulation, a heavy burden of bureaucracy and taxes. And it's quite unusual indeed that the German exporters haven't been able to benefit from this general improvement in the world economy. But again, in the data today, we see an improvement in expectations. It seems that German companies do expect to benefit from this upturn in the global economy. At the same time, we see order books still shrinking. So the improvements haven't arrived, but at least companies are becoming a little more optimistic. Of course, there's still uncertainty about the future path of energy policy. Energy prices have come down, but especially for gas, not as far as necessary to help that sector of the economy.
The labor market has remained fairly resilient, actually, in fact, even because there's this economic weakness. Do you expect that to continue to be the case?
Yes, we do. We see some sectors of the economy, for instance, the car industry and supplies to the car industry, where we see job losses. But overall, the majority of companies is still looking for people. And some companies are actually held back by a lack of staff. So we don't expect an increase in unemployment. And that's another factor stabilizing the economy at the moment. It's a stagnation without a high level of unemployment.
So, of course, Germany has been hit by quite a lot of strikes, more than usual and more than other countries. What does this tell us about wage growth, wage expectations, and the labor market, something that is so important to the ECB and their future policies?
Yes, there is some tightness in the labor market, and that is driving wages. That does increase the bargaining power of unions. At the same time, the strikes in Germany we've seen are often strikes of relatively small unions that exploit their particular market power, like train drivers or pilots. So it's not a very broad phenomenon. The big unions haven't reacted to the tight labor markets by increasing wages or increasing their wage demands massively. There are sizable wage increases, but it could be worse from the perspective of the companies. In terms of the functioning of the labor market, significant wage increases are what is needed, because if there is not enough staff, if companies do not find people, they need to pay more.
The ECB is now, the signaling is pretty clear that they'll start cutting in June. How helpful will that be for the German economy?
From the perspective of the German economy, even earlier rate cuts would be appropriate, but the ECB looks at the Eurozone as a whole, is worried about wage increases in the service sector in particular. It's fine if this comes in June, but that would then really help the German economy. One of the weaknesses in Germany is construction, and that would also help in particular for construction.
There's a latest plan to reduce, for example, the corporate tax burden to the tune of 7 billion euros. Is that helpful, or are there other things that you think would be more helpful for the economy?
That would be helpful. The corporate tax burden in Germany is one of the highest in the G7, so it would be good. But this law got stuck in the second chamber in Germany. So the second chamber, where the states are represented, has already reduced this package. They've said if they agree, they'll only agree to something like 3 billion. So it's become a very small package. It's not going to be a game changer. The direction is fine, but it's not going to change much if it comes.
Mr. Fuest, thank you, as always, for joining us. Clemens Fuest, the president of the Ifo Institute. Now, coming up, as EU leaders discuss further tariffs on Russian grain and using profits from frozen assets, we'll be looking at how the Ukraine-Russia conflict has turned into a global economic conflict. That's next, and this is Bloomberg. Well, the proposed use of frozen Russian assets to fund billions of dollars worth of support for Ukraine is the latest effort by the West to deal with Vladimir Putin through targeting the Russian economy. With a rate decision from Russia's central bank later this morning, we also look at how the war and sanctions are impacting the country's economy. Well, I'm very pleased to be joined by Bloomberg's Stephanie Baker, newly minted author of a new book, Punishing Putin: Inside the Global Economic War to Bring Down Russia. So, Stephanie, always great to speak to you. You have some really pretty unique insights. When you look at the U.S., of course, saying that the Ukraine remains stuck on Capitol Hill, and there's talk in Brussels about freezing assets, giving the money to Ukraine. Is there a political will, but a legal stop?
Well, what they're looking at now is taking the profits from those immobilized Russian central bank assets that are currently being earned by Euroclear in Belgium and using those profits for Ukraine to fund through this EU fund to provide military assistance. And the thinking there is that's not seizing the principal, so that is a lower legal hurdle to surmount. The Euroclear doesn't have a legal obligation to pay any interest on those assets to the Russian central bank. And so that's what's moving forward at the moment.
Stephanie, tariffs also seem to be splitting opinion, right? So some say they work, others say they don't. So would it actually make a difference if there were tariffs on Russian grains?
I think this has grown out of frustration within Europe that they've seen an influx in Ukrainian grain, particularly in countries like Poland, which has created a political problem. And so there's this disconnect. Why are we still importing Russian grain? When we're flooded with Ukrainian grain? Why not stop or limit through tariffs the amount of Russian grain into the EU?
We're also hearing that the U.S. is actually asking Kyiv, Ukraine, to stop, with drones hurting some of their oil facilities. So, on the other hand, it could be effective in trying to cripple the economy. What's the right way to think about this?
Well, I think in Washington, obviously, gas prices are very sensitive in the run-up to an election, and you've seen the price of oil creep up over the past month or two. I think from Ukraine's perspective, they're frustrated that, the Kremlin's oil revenues are still quite high and the West hasn't done enough. And so they're going to take matters into their own hands. And I think it's a delicate balance of how far they go with this and how much damage they can actually inflict. So far, they've bombed 9 refineries in Russia. And the problem is once they damage some of those facilities, because of sanctions, they're having difficulty replacing some of those parts. So it does slow down their ability to refine products. And that does have an impact on oil prices because I think many people think Russia's going to be exporting more crude oil as a result.
India has also just said that actually it will stop taking oil from certain Russian tanks. Is that true? I mean, are they actually going to do it? Is it a game changer or is it lip service?
Again, this is finally, Washington is enforcing the sanctions that they imposed. They put sanctions on Sovcomflot, which is the Russian state shipping company. And India is now saying we're not going to take any oil from Sovcomflot tankers. We do not want to be mixed up in any sanctions violations. And they've done that with other tankers that have been blacklisted by Washington. So India, which has been taking huge amounts of Russian crude, is reducing that. It's still taking quite a bit. But I think you're seeing, finally, sanctions enforcement having some effect.
Stephanie, thank you so much. Stephanie Baker there from our investigations team with also her wonderful new book, I think, out now.
No, it's not out.
Out soon.
It's out in early September. We've got a while.
September.
Yeah.
So pre-order the Russian invasion, of course, of Ukraine, left, right, and center. It has been one of the key drivers of inflation across Europe, with the UK particularly exposed to energy imports. Now, the latest data this week is showing a few green shoots of recovery in the UK. Now, inflation fell to its lowest level in 2.5 years. Retail sales actually stronger than expected, and Bloomberg Economics says the British recession is over. Now, some argue this is just papering over the cracks of Brexit. They say the lasting damage of leaving the EU appears to be inescapable. Well, that's the view taken by Matt Winkler, our Bloomberg editor-in-chief emeritus, and he joins us now. Matt Winkler, thank you for joining us. First of all, why write a column on Brexit now?
Well, it's been 8 years, and for one thing, and 8 years is plenty of time to do an assessment. And we have, I think, by all accounts, emerged from COVID-19, certainly in the U.S. So it's a good time to say, all right, what is the situation with the UK since we have recovered, so to speak, from COVID-19? And the answer is the market told us 8 years ago that Brexit was a giant step back for the UK. And the market is telling us today the same thing. So that's the reason for taking this very seriously. And not only that, if you asked the British public, which YouGov did last July, the British public said, we would like to rejoin the EU. And curiously, in an election year in the UK, politicians from both parties would rather discuss Gaza 3,000 miles away than doing something with the EU, which is very important to Britain's health.
Are there any analogies to be made with Brexit?
You know, it's probably the worst market disaster at least if you look at the currency, in modern British history. The pound had a record decline that day, June 23rd, 2016, which was the date of the referendum. The pound has not recovered since then. And today, if you look at the equity market, you look at the debt market, Brexit has imposed a premium penalty, if you like, on British assets. And so investors today have to pay a lot more and suffer a lot more in their returns owning British assets, whether it's debt or equity. And that is a consequence of Brexit. And the reason for that is, by the way, if you break with 40% plus of your trading partner, which is what the EU represented to Britain, you're going to pay a price. And to put that in context, actually, you know, the U.S. Depends on Mexico and Canada. Those are the two biggest trading partners. And that's actually about half of what the EU represents to Britain. And if we did something similar, of course, it would be a catastrophe. So that's what the UK is living with. The public belatedly realizes that. And the market is consistently reminding Britons that the country, in a relative sense, has gotten smaller, not bigger.
And Matt, I guess there's a bigger question of, you know, whether the world has learned anything from populism. I mean, there are those that would say we now have two candidates fairly to the center, and that's partly thanks to Brexit, because some of the more colorful policies have been weeded to one side.
Yeah, I guess, you know, look, there's a silver lining in everything. There's the saying, every problem is an opportunity. And it's true. The center is where you govern best. The center is where you get things done. And so perhaps we are getting to a point where people realize that the kind of politics that is preferred and that is going to be beneficial is from the center, not the right or the left.
Thank you so much, Matt Winkler, our Bloomberg editor-in-chief emeritus, of course, with his new column out today on Brexit. Now, coming up, as Nike warns investors that sales will take a hit this year, we also take a closer look at the retail landscape. That's coming up shortly, and this is Bloomberg. Reddit ended its first day 48% higher in what was the fourth biggest U.S. IPO of the year. Now, the share is currently a touch lower in pre-market trading. Well, Bloomberg's Charlie Wells is with us. So what's behind this price hike? Day one, and it kind of flew off the shelf.
It was a pop, right? I think with any IPO, you're wondering, is it going to be a pop? Show's going to go up, or is it going to be a flop? Are they going to go down? And I think Reddit got so lucky because they've been really kind of spinning over the last few months this AI story about how AI companies can potentially use the trove of data that they've got to help improve their large language models. And it seems like the market yesterday believed that. And this bodes well for other companies who are thinking about IPOing, who are using Reddit as sort of a temperature check. And that temperature check was hot yesterday.
Charlie, another one we're watching, of course, FedEx earnings, which beat expectations.
They really did. They beat expectations on profitability. And I mean, look, when you think about the big U.S. shippers, there's FedEx and then there's UPS. UPS in a lot of ways has been outperforming. They've got a single unified network. FedEx for a long time has had FedEx and then FedEx Express, and there were a lot of kind of, redundancies there, and so that company has been on a real restructuring, and they were able to tell positive news yesterday about that restructuring, and also something that investors like. They were able to talk about $5 billion in buybacks. Investors like it. Share price up 13% in late trading yesterday.
Charlie. Thank you so much. As always, Charlie Wells there on some of the U.S. corporates. Now, Nike has also warned that investors that sales will take a hit later this year. This is as the sportswear giant works to make adjustments to better match merchandise with shoppers that they want to buy. Now, this comes as Lululemon released a lower than expected sales outlook as visits to U.S. stores slowed at the beginning of the year. So for a deeper dive in the world of retail, I'm delighted to be joined, as always, by Andrea Felstead of Bloomberg Opinion. So what's going on with sportswear?
The sportswear market is in a real state of upheaval. There are three things going on. You've got the great rotation, which is the move from, we're still in casualization, but there's a move from, the very slouchy loungewear we were all wearing in the pandemic to more formal styles.
We're more chic now.
Exactly, definitely. You've got the great inflation, pressure on consumers, but you've got this third factor, which I call the great fragmentation. So for many years, Nike, Adidas, Puma, they could sell all kinds of products to all consumers at all price points. And now you've got competitors nibbling away at their sales. You've got On and Hoka in running. You've got Lulu in athleisure. They're all taking bits of their sales. So they, in a way, they're more like mid-market fashion brands, and they've become too reliant on a single product that, really burns bright and then fades. And they have to get a pipeline of new products. And Nike has been particularly suffering with this, and that's what they're trying to address.
So what's the read across for Adidas?
I think that read across from to Adidas is actually quite limited. They're both facing the same big picture, but the new CEO at Adidas, Bjorn Gulden, set out his thoughts last week. He seems much more on the pulse of what's going on. He seems to understand that these brands are fashion businesses as well as sports businesses. And, he came from Puma, which is more fashion-focused. He noticed things like, in 2022, some of their styles, the Samba, the Gazelle, which are known as the terrace styles, were really heating up because of collaboration, for example, with Gucci. So last year, he really ramped up the production of those styles. But crucially, he's not thinking that this is going to stay static. He's looking at where it might go next, introducing new products and figuring out where he can take that range on.
Andrea, what's going on at LVMH? So we have the number 2, Antonio Belloni, stepping down, and it's a reshuffle. Are they looking for the person to replace Bernard Arnault, or is it just trying to make the business sleeker?
Well, I think we are getting this sort of almost generational change at LVMH. You've had a number of senior executives who worked alongside Arnault either retiring or moving to different roles. But what everybody's watching, every little role, every little change at LVMH is fascinating, because at some point we're going to get the transition from Bernard Arnault to the next generation, and it's really which of his children gets the role. Is it one? Do they split it? What happens? Now, the interesting thing about these senior moves is if it's one of the younger children, do one of these senior executives step in until they're ready?
So interesting. Andrea, as always, thank you so much. Andrea Felstead there from Bloomberg Opinion. Surveillance up ahead, and this is Bloomberg.